what do you think the price needs to get back up to before, or how long does that need to sustain for before you get funders saying, actually, $1.5 billion, or consortium of funders think, okay, $1.5 billion, now's the time to move?
So my experience right now is that it's really Chinese money. I mean, even when that move starts to happen, you know, what I see is interest coming out of China, and I don't think that's bad. I think that shows a commitment to electric vehicles and a realization about what's happening with EV adoption.
Yeah.
So even when we move past where Indonesia, which is kind of where a lot of that investment that you referred to earlier is going, I actually think inside of Africa and elsewhere, you're going to see Chinese investment as well. So it's not going to be just like isolated into Indonesia. It's going to be kind of globally.
And I mean, Europe are building these large gigafactories for this EV revolution. They want to be in control of as many of the moving parts as possible. And you've got a lot of the European automotive manufacturers funding these bills. And we look at their budgets, their forecast budgets. They're in tens of billions of dollars here. But you're saying at a basic level, the Chinese, the ones that are going to be funding these mines into production in this EV revolution, because we hear the same story in copper. We hear the same story with the lithium.
It's the real story. It's a real story.
But it's okay. I get it's the same story. It's like we're going to do this. We're going to do this, but the money isn't seemingly available from the West, and everyone's looking to China like they used to be able to get these things done. Do you think that Chinese are going to take a grip on the speed at which this EV revolution is allowed to move, and will it be to their drumbeat?
Well, certainly I think what they've done is they've set environmental policy, which is actually pretty spectacular. Like they're leading the world in environmental policy as it pertains to the adoption of the electric vehicle.
Right.
And if you think about the automobile industry, China really failed at creating an automobile industry in China. They might create parts, they might create certain brands, but really, the US, Korea, Japan, Europe, Germany, they kind of held the grip. And I think they're saying, guys, the gig's up. And what they're doing is they're not going to sell you a battery. They're going to sell you a car. And I actually think if we fast forward 10 years, let's say, and you look out in London, you're going to be buying a Chinese car. Now, it might not be called a Chinese car. It still might be called Ford. Well,
that's my point. That's where I was going. I thought you were going somewhere else. But they own these brands now.
They're going to. They're going to own these brands. And so they're going to be vertically integrated.
Yeah.
And so you're going to have a loss of Detroit in like the traditional sense, like the automobile industry is going to be lost. And the reason is because, if you're a Western investor, what was the S&P up last year? 30%, something crazy, right?
It's nuts.
This year, what's Tesla up? I mean, the market's on fire, all-time highs a couple of days ago, right?
Yeah.
So why are you going to invest in this tiny little sector? In fact, 2 days ago, like last week, you had all-time highs in every single sector in the S&P except for mining and energy.
Right.
So, if you're an investor, you're not going to allocate to the sector. So you get no money from the West because you're kind of year to year, 12-month compensation, or you're passive and you can't choose. And then in China, you've got this low cost of capital and you're trying to build an industry. Like, it's kind of inevitable. It's kind of inevitable and it's happening.
Yeah. You're not worried about quantitative easing in the US. I mean, there's a lot of borrowing going on to generate this growth. And we had a lot of commentary before Christmas about this. There will be a moment where the market just implodes.
Look, I'm not a gold company wearing like my tin hat here. I think you should interview someone wearing like a tinfoil hat and a gold bug. But I do think for maybe this is one of the most interesting moments for gold in a long time, because you do have all these random effects. But when you're talking about governments, the one thing I will say is their ability to carry the trade, to kick the can down the road, is probably longer than we think. I mean, there are these scary facts, like by and large, the Russians have sold U.S. treasuries. The Chinese aren't buying treasuries, they're letting them roll off. But it's hard to say that's some doomsday scenarios happening next week.
Okay.
I think that the world can't have the reserve currency, namely you can export inflation,
right?
But you can't have the reserve currency fail because you fail too. So we can have this conversation in 10 or 15 years when there's maybe more than one reserve currency.
Yeah.
But should there be a recession? Could there be a recession after a 10-year bull market?
Sure.
Yes.
Always.
Are we going to have mass panic and civil? No, that's not happening. I don't think.
Right. Let me ask you about management. Okay, if you're a royalty company, people must approach you all the time. They're asking for money, your money, and you have to do diligence on them, right? So you get to meet a lot of management teams. Specifically nickel, if we can stay on nickel. What are you seeing out there? Are there lots of good teams? Nickel's an easy thing to mine, get into production, get into market, or do you see only a handful of people capable of actually bringing anything to market?
Well, it's kind of extremes, right? Like
Yeah.
on the one hand, you have like, Independence and Peter like this great company. So like, what do they need, right? They don't need anything really, right? They just
Sure.
kind of keep ticking on.
Right.
And there aren't that many small nickel projects left that are potentially fundable. I mean, Dumont would be an example, but it's stuck with Waterton, and I think RNC may have the operatorship, but the reality is they don't have any control. That's
Yeah.
all. So the question for Waterton is like, are they going to do anything this cycle, or maybe it's so irrelevant to their portfolio that they're focused on gold?
Right.
I don't know the answer to that, right? But it's a great asset that could be moved forward.
But talk to me about the management team. I want to know, what are you looking for when you talk to these guys? Is it all about the asset? It'll be fun, because given that you just said a second ago, we sit back, the management teams run these things. So what are you looking for?
I've actually found that there's this weird Darwinian thing, which is generally good management teams end up with good assets.
Well, yeah.
Or it ends up that way eventually, right? So
right.
Like, I can't tell you like what is a world-class asset being run by buffoons. Like I'm sure there's examples.
And I don't want you to name names, but I'm saying like, what do they need to know? What gives you comfort?
I think a team in particular for nickel that understands the technology around that deposit.
Because it's complex, right?
Right, especially like, okay, is it a sulfide? What is that going to look like? What's the process? What's the flow sheet going to look like?
Right.
In the face, by the way, of not only all the HPAL things we talked about, but in the face now of Nemaska, where they raised $1 billion, they got the flow sheet wrong, or at least the capex wrong related to the refinery. It's a mess. So I think if you're going to do a royalty, you have to believe it can be built.
Right.
And so that means you got to have sufficient like technical knowledge in-house to believe that group can build it. But I would tell you, I don't really think, at least off the top of my head, I can't think of a project out there that's actually going to get built by a junior company.
Right.
It's a $1.5 billion capex. What happens is they're going to bring it up to feasibility.
Yeah.
They're going to get it ready with partners, and then in one form or another, they're going to hand over that operatorship to someone who's actually able to build it. Right. Like.
Right. So what are the red flags then? You're saying, right, okay, if someone's telling, a junior company is saying, I'm going to get this thing into production, you're going to call BS on that.
You can just look at the project and know. I mean, if
well, we don't know. Like
for instance,
you're the expert
some of the micro cap, massive disseminated laterite, low grade ore bodies. You look at that.
Yeah.
Now that doesn't mean you shouldn't invest, because to be clear, if it has a $6 million market cap today, and uranium is a great example of this, and nickel triples, well, that $6 million market cap company trades as an option.
Yeah.
So it may well trade at 150 million market cap through the cycle.
Right.
So that doesn't mean you shouldn't own it. That's different than as a royalty company thinking about whether or not you want to give them money to invest.
Right. Right. Okay. So good point. By that. So I want to talk about, and for people watching this, and for people, and me, going, how to identify, having spoken to the management team, or asking, what should I be asking the management team to give me the clues to allow me to make an investment decision?
So I would ask myself first, like, what is my risk tolerance?
Mm-hmm.
Like, am I delving into the speculative, right? Because if you're going really speculative, Mark Selvia, for instance.
Sure.
Okay, so Mark, I understand in the next 2 weeks, or sometime very soon, Mark is going to have a publicly traded company with nickel asset, and that's an exploration play.
Yeah.
Now, look, if he makes that discovery, that's going to go up. Now, if he doesn't, by the way, it's going to crash.
Yeah.
So that's one type of investment.
Yeah.
Buying independence is really just going to be a function of cash flow and earnings relative to the price of nickel.
Yeah.
Now, nickel has a whole bunch of projects in between, like Turnagain. I think, I can't think of, there's a handful of them in Australia. I've just blanked a couple of their names. And they're going to fit somewhere in between on the spectrum. And what you have to ask yourself is, when I look at that ore body type, do I think that there is a shot of that getting built in the cycle? Okay,
let me another scenario for you here. Okay, you're going to say buy nickel all day long. Lots of different options in nickel, as you should. But if I'm a high risk tolerant, I've got some throwaway money here. Don't mind if I lose it. What are the don't need to name names. What are the types of nickel companies I should be looking at? Okay. And I'm going to ask you the same in a second if I've got low risk tolerance.
So if you're high risk, I would look at really large ore bodies
Right.
that will trade as options, and they will happen whenever.
At some point they will happen.
Whatever that like.
Buy them, put them in your drawer.
Yeah,
done.
and by the way,
okay.
however, you should think about it in terms of an option value like theta. In other words, time decay.
Yeah.
You should actually literally think about that as an option. So you buy $50,000 today.
Yeah.
By the way, if the time horizon is 5 years, it's probably going to zero because they're going to raise money 3 times.
Right.
But by the way, just like an option, if it happens in the next 24 months, you might do X times your money.
Right.
So I think about that as an option. So that's
nice.
one
Those are nice clues. That's nice. I like that.
Okay, another one is for better or worse, like death or glory, I like to have a little bit of money invested in exploration play. Like, when Mark's thing comes out, just for fun,
Yeah. I agree.
Right? But that's very binary. You can only twin a director's hole so
Yeah,
many
we're not
times.
betting the house.
Right.
But it's worth putting something on that because I think
exactly.
it
So
looks...
those are the high risk ones, right?
Right, okay.
But personally, my biggest nickel positions, besides like the company I'm the chairman of,
Yeah.
are these large option plays where I look at them as time decay, theta, because I think that it's going to happen sooner than that thing gets diluted down because of capital raises.
Yeah, okay.
So that's how I would look at it. It's very risky, and I think you leg in unless the thing has no market cap as it is.